Hello everyone, welcome to yet another video on my channel. In today's video we'll be talking about understanding basic channels in technical analysis. So considering the topic we are discussing, you can clearly see that for some persons this is like part of basic technical analysis, yes. But then you'll be shocked to discover that a lot of us, tend to overlook things like this whenever they appear on our chart. Now, it doesn't matter what concept you trade, be you an SMC trader, an ICT trader, whatever, it doesn't matter. Technical analysis has basics, and if you learnt all of those concepts I mentioned without learning the basics of technical analysis, you are going to sometimes find yourself wanting, right? It's like skipping primary one or primary two or primary three and then just jumping straight to primary six and JSS one. Or it's like skipping, you know, SS3 or year one in school and jumping to final year. Yes. So everything that is a basic topic in technical analysis is important. So if you missed any of them in the course of your learning, I would advise you start, taking a look at some of these things. So let's just get straight into the video. Like I said, we'll be talking about basic channels in trading. There are two major types of channels, you know, in technical analysis. We have the ascending channel and then we have the descending channels. Yes. So now, what are ascending channels and what are descending channels? Now these are, simple channels that form on the chart to either indicate a potential reversal after a trend has been going, towards a particular side. It indicates when a change in trend is about to occur on a chart or on a particular pair. Now we have, okay, let's deal with ascending channels first. We have channels like this whenever you see price move in basic market structure, actually creating higher highs and higher lows, higher highs and higher lows, just like this. Now, structurally speaking, you will agree with me that every time price is forming new highs, that as price moves, it is taking out the structural liquidity of all of these highs that it is creating. Yes. Now, thereby ignoring all the structural liquidities on the lows that it created, in the course of making that rapid uptrend, right? So now whenever you see a channel like this forming on any pair, you should have it at the back of your mind that that pair is giving you some indication that it is going to come for the liquidities of these structural lows that are here. Oftentimes, people tend to just, ignore channels like this when they spot them or when they appear on the chart with the thought that, okay, it is a clean market structure, it's forming higher highs and higher lows, higher highs. one thing you have to understand is that every trend comes to an end. Every trend comes to an end. So the earlier you understand this, the better. So whenever you see an ascending channel like this, the result in most cases, let's say in 100%, in give or take 80% of the time, it always ends up like this, coming to take out all the liquidities of this structure low, just as we have, said earlier. So whenever you see price creating an ascending channel like this, know that at some point that trend will come to an end. And the first indications that you should always watch out for is usually a swing failure. Whenever price is unable to take out the most recent high, right, it's always the first indication that that trend wants to come to an end. Or sometimes you may get price move to take out this high completely with to take out this high completely to create a wick. It will create, just perform a sweep of this high and then start selling. So what that means is sometimes you may get, let me move this aside, you may get price print a candle like this, just take out the high of the structure and start selling. So if it doesn't give you a swing failure, it would always hunt the liquidity of this high, give you a rejection, and then it will start selling. This has happened on many occasions. Before the end of this video, I'm going to show us one of the trades I caught, via an ascending channel. Now, descending channels, on the other hand, shows you reversals to the upside. So usually, price will start forming or coming from a solid downtrend. Price will start coming from a bearish market, forming lower highs and lower lows like this. Forming lower highs and lower lows like this. Now, just as we, mentioned earlier in the case of a structural uptrend, you will also understand that as price is bearish and creating new lows, it is also leaving out these ones on the high, right? So same thing would always happen. You would get a swing failure and price will break out of that channel, and price will break out from that channel. So again, the first indication to look out for is always a swing failure. If you don't know what a swing failure is, you can just ask your AI or Google it. So always look out for a swing failure first, because that is the first indication of a change in trend in any structure. If you don't get a swing failure, look out for a sweep of liquidity of a structural low. In this case, that would be something like this, that would be something like this. Price will just perform a sweep of a structural low, not breaking it, a sweep, and then starts buying. you know. So if you add this to the knowledge of market structure that you have, you know that whenever a sweep like this happens and triggers a reversal, you just need to look for a break of structure on the next time frame that follows to, see where you can possibly get an entry. But these two things are always your first indication: the swing failure or a sweep of a structure high or structure low, as the case may be. Now, let me show you some examples. I caught this on I caught this on USDJPY yesterday. As you can see, clean channel forming, and then price in this case came into an FVG, right? If you go to the 4 hour time frame, the FVG is more visible. So you can see that that was the high I targeted as my potential entry. So you can see price selling from after taking out this high and giving us that rejection that I talked about. You can clearly see it there. And then what happens? We started getting the sell, on USDJPY. So this is a classic example of a reversal of a channel playing out a reversal. I think there is one here. Let me see on ADJPY. I don't know if it's a channel, but I think I spotted something like that here. Yes, I think so. So you can see we have a similar scenario here. Let's go to 1 hour time frame and see. You can see we have a similar scenario here of price playing out a down channel and then a breakout follows. So if you mark that low, you see that price reversed exactly after sweeping out this entire low. You can see it. So until price gets to this zone on AUDJPY, it will not rest. So this is just a classic example of a descending channel reversing to the upside, and this one is a classic example of an ascending channel reversing to the downside. I hope you find this video helpful. I'll see you guys in my next video.